Paul, welcome to the show. Let's get into it right away because there's a lot to dive into. Let's begin with the news out of Australia and the decision from the RBA to cut rates to 1%. The move was expected. Did they provide any indication in terms of if it's a one and done or if we should expect more to come?
You know, the comments that we're hearing so far is that there may be more to come. They're going to, they've cut the rates. They're going to sit back and kind of wait and see what happens. They're expecting consumption to pick up a little bit. Consumption's been very slow, and part of the reason for the rate cut here in Australia. But again, it follows what's been happening around the globe. As we look at the PMIs, the global PMIs out yesterday, not really good news anywhere. If you look at the average of the global PMIs, we're now below 50, so in contractionary form around the world, kind of confirming the global slowdown due to a lot of the trade wars. So we're seeing a lot of easing talk from a lot of the central banks, and Australia now with their rates down at their lowest level in decades at 1%, may go lower, but I think you're probably waiting until the fall before we see that happen.
So, Paul, it was interesting because the initial reaction was to the downside, but they were unable to take out yesterday's lows on the spike lower, and they're actually up on the day. They're up by about 0.5%. I'm wondering where you think that lift is coming from, relative to the comments that they made.
Yeah, it's hard to read that one. Again, when you're looking at global rates, anything that's got a positive rate is finding fund flows right now. So we're seeing some flows into the U.S. We're seeing them out of Germany and out of the European Union. So hard to read the immediate reaction to that. Like I said, I think we're more apt to wait for the dust to settle after a week or two before we jump into those markets.
Yeah, and as I said that, Paul, and pulled up the chart, I'm noticing while they tested yesterday's lows, unable to get up above, or below them, they're basically right back into the middle of the range from yesterday. So 0.5% to the upside, maybe not as significant as it seems. Paul, it's not just the RBA, though, that's stirring things up this week. We also have the EU summit. Last I heard, they've been struggling to establish who's going to be president of the EU. I heard they had a marathon 20-hour session yesterday to try and figure things out, and they were unable to decide on anyone as a result.
Welcome to Europe. And I think part of the reason why Draghi has been as vocal as he has been, he's kind of throwing a grenade into the middle of the room as he's walking out the door. I think the general consensus is we're going to see somebody from the north, which may not be as dovish on rates. Certainly Germany has been notorious historically for a very tight monetary policy. And I think that's the wrangling that's going on with the members right now, is they're looking at the economic data, the negative interest rates that they're seeing in Germany, and they're trying to figure out how to normalize. They should be dovish, but again, they'd like to get to a more normal rate environment, and that probably argues for somebody from the north, from the German side of the EU.
Paul, when you say welcome to Europe, I imagine that you're also implying, or at least tying that back to the situation that we've seen the UK, which has been dealing with a very similar situation in terms of inability to see anything really decisive. But we're also waiting on the UK elections. It sounds to me like two parties, or two people, I should say, have really emerged as the front runners, and I'm also hearing about how they're sort of drawing their own lines as far as, well, for example, one thing I'm hearing of is how Boris Johnson is potentially going to try and make it so that Parliament can't rule out a no Brexit deal, basically make it difficult for them.
Yeah, and it's interesting, and here's where things are going to get really complicated as we go down the road. And Boris Johnson's looking for a deal by October.
Okay.
He likes some of the stuff that's coming from Theresa May, but we got to modify it. I think whoever gets into that position is going to find out the real problems that Theresa May had going in trying to put together a deal. It is going to be complicated.
Yeah.
Europe is not very willing to deal with England and kicking them out of the Union, and that creates a problem for any type of a deal. So if you and I can't agree on anything, let alone the color of the carpet, we're going to have a real tough time with anything more complicated than that. And I think that's really what's going on with the Brexit right now. Is you have two parties that really are not interested in negotiating.
And Paul, with all that, both parties not necessarily being interested or putting a lot of energy into negotiating, is that October deadline you mentioned, is it a reality this time, or is it just something that will continue to kick down the road?
Yeah, no, it's I think something that we're going to be kicking down the road. I mean, technically we should have had a deal already in hand. That's not going to happen, and I think that's going to continue to get postponed until we can get some type of an agreement and a ton of concessions on both sides. So it's going to be a tough one to get done, I think, this year.
All right, well, that's probably what continues to weigh on the pound and the euro for the most part. Let's talk a little bit about some of the EU numbers. You mentioned the PMIs that we saw recently, a bit of a disappointment. I noticed this morning the German retail sales, well, much like the PMI data that you touched on, I mean, it could explain some of the weakness as well. I mean, retail sales for Germany came in month to month down 0.6%. They were looking for 0.5% increase. That was after a 2% decrease last month, and if you take a look at year over year, they're 4%. They were looking for 2.7%. Paul, I mean, again, this just sort of speaks to some of the concerns you mentioned earlier, or that investors are feeling and traders as well.
No, that's absolutely right. You know, again, it goes back to the comments that we're hearing from central banks. Central banks around the world are trying to figure out how to increase growth, how to pick up inflation. They have but one tool, maybe two. And you're not getting a lot of help from a lot of the governments within each of those countries. So with fiscal policy not really being implemented at all, it's up to the central banks, and the politicians are very willing to step back and allow the central banks to do all the heavy lifting. The problem is we're well beyond the scope of what their abilities are to either cut rates or buy bonds. And when you're looking at it from a consumer's perspective, the consumers are looking at it and going, well, gosh, things can't be all that great if we're cutting interest rates. I need to probably save a little bit more money and cut back on some of my spending. And that's really what we're starting to see around the world.